It's hard to believe these days, but there was a time when the European Union exported energy to Russia. Yeah, you heard correctly. Until the 1990s, there was no mention of Russia in relation to large-scale crude oil. However, we all know that the Russian bear is a shark of energy exports. Between gas, oil, and its derivatives alone, they make up 60% of Russian exports. What is even more surprising, 1 out of every 4 rubles generated by its economy is directly related to the oil sector. Since the Russians started exploiting all these deposits on a large scale back in the 1990s, oil has been the driver of their industry. And yet, has Russia become richer since then? Well, no. Or at least not as rich as it should be. Despite being the country with the largest gas reserves in the world, its performance has not only been almost stagnant, but also much more disappointing than that of other countries in the Soviet orbit, such as Poland. In other words, on the one hand, we have Russia, which in 2005 was the largest exporter of natural gas in the world, while at the same time, the majority of Russians still live in post-Soviet conditions. The reason? Well, there is one hypothesis that surely comes as no surprise to anyone: the curse of natural resources. If you discover a major oil field in your country, prepare for the worst. Tell this to a Venezuelan and I'm sure he or she won't disagree with you. There is an empirical relationship between poverty and abundance of natural resources. Of course, there are exceptions, such as Australia or even the USA, but in general terms, it's clear. Having natural resources is a bad sign. With this in mind, many economists have studied whether or not Russia suffers from natural resource disease. In particular, most studies focus on a very specific strain of this problem, the Dutch disease. So the questions are clear. Is the Russian economy sick and doomed to failure? Let's have a look at it. The natural resource curse is a very generic term that everyone uses for completely different things. So the first thing is to make it clear what we're referring to when we say that oil and gas could be making the Russian economy sick. In this case, there are at least 3 problems related to natural resources. The first has to do with culture. I'm sure you've heard it many times that in the Caribbean, they are still poor because it's impossible to starve. Or to put it another way, that in cold regions where food is hard to come by, people have to become more forward planning, and institutions favorable to economic growth tend to emerge. And while there is some truth to this, it gets worse when we move to the political level. Wherever there are natural resources, there will be corrupt politicians or warlords willing to exploit them for their own ends. This is what happens, for instance, in Africa, a continent extremely rich in rare earths and precious minerals that, nevertheless, does not translate its natural assets into wealth for the people. For what reason? The movie Blood Diamonds illustrates this very well. Resource mines finance paramilitary groups that exploit Africans. But take note, because this is not unique to Africa. Think, for example, of Spain, but not today's Spain, but rather the Spanish Empire that discovered America. Spain reinvented parliamentarism after the fall of the Roman Empire. However, there came a time when the king no longer needed this institution to govern. It's true that the fall into parliamentarism came prior to the discovery of America, but from that moment on, the decline advanced much faster. The king received so much money from the viceroyalties that he no longer had to summon the territorial leaders to approve budgets or anything like that. And let's remember that in the feudal system, even though the king was the head of the estates, the nobles had a lot of counterweight. However, American silver concentrated all power in the crown. The result? Spain, despite having the infinite source of wealth that was America, ended up being much poorer than the United Kingdom or the Netherlands, probably as a consequence of increasing political tyranny. And the same thing is happening in Venezuela. It has happened to a lesser extent in Argentina, and, as you can imagine, in Russia itself. In general, the resource curse is tremendously related to the democratic quality of governments, which would explain why countries like the United States, Canada, Norway, or even Botswana are much more prosperous than other countries with similar conditions. But that's not the end of it. So far, we've told you about the cultural and political problems, but there's another factor to take into account that is purely economic: the exchange rate. And this is precisely what gave its name to the Dutch disease as a synonym for the curse of natural resources. It all goes back to when Holland discovered a huge oil field, started exporting it, and after that, its local currency became stronger. The problem is that a stronger currency made it very expensive for other countries to buy Dutch products other than oil, and that hurt its industrial sector. Not only because of the exchange rate great problem, but also because, as the industrial sector exported less, workers stopped being interested in factories and wanted to dedicate themselves to other sectors such as services, making the problem even worse. And if you add to this a lack of immigrants to compensate for the loss of labor, it all adds up to a declining manufacturing sector and an economy dependent on crude oil. But okay, I know what many of you are thinking. Yes, this is all well and good, but aren't we here to talk about Russia? And you're absolutely right. Now, you know what the disease is, so let's take a look at the patient's diagnosis.
The Russian patient.
The Dutch disease has three main symptoms: an increase in the exchange rate, the extraordinary rise in wages, and the loss of clout of the industrial sector. Let's start with the exchange rate. Has the ruble really appreciated thanks to oil? Well, the answer is a resounding yes. According to an IMF study, since Russia began exploiting its oil reserves on a massive scale, a 1% increase in the price of oil implies an appreciation of the ruble of 0.5 points. Put this way, it might not seem like a big deal to you, but put in context, it means that oil has a third of the weight that government spending has in determining the value of the ruble. It's so high that, in fact, it's enough to compensate for the devaluation suffered by the ruble due to the corruption of the Russian government and all its institutions. But what about the rest of the symptoms? Well, we also see symptoms of the Dutch disease in salaries. For example, the growth of wages in the manufacturing sector, that is, the long-standing industry, has been much smaller than that of other services such as commerce, health, or education. This is a consequence of a declining industrial sector due to sickness. Well, we haven't put it in the graph, but the sector in which wages grew the most was, as you can imagine, the oil sector, especially during the first years of the boom. But one last symptom remains. Did the industrial sector grow below the primary and tertiary sectors? Well, here, Visualeconomik community, the answer once again is yes. As you can see on the screen, since 2000, the industrial sector has been growing systematically at a lower rate than the rest of the sectors. What's more, it seems that the more the fuel sector grew, the greater the difference with the manufacturing sector. To recap, there was an appreciation of the ruble exchange rate due to oil. There were wage increases, but outside the industrial sector, and they had lower growth than the other sectors. Undoubtedly, symptoms of the Dutch disease. You could say that if Russia has to take tanks out of the World War II museums to take them to the front lines, it's because oil has done terrible damage to its industry. The weapon Putin used to threaten Europe with a Game of Thrones style winter has turned out to be the Achilles heel of the Russian economy. Or at least this is what many people think, and what anyone would think when looking at these graphs. But at this point, you need to allow me to go out on a limb and do a 180-degree turn. No, Russia is not suffering from Dutch disease. It is possible that so much oil has made the country more corrupt, and the bar was not exactly low, but none of these symptoms are caused by Dutch disease. Do you remember what happened to the ruble when the invasion of Ukraine began? The ruble appreciated against the dollar. Does this mean that Russia was suffering from an episode of Dutch disease? No, not at all. Putin simply put capital controls in place so that Russians could not get rid of their rubles. Here we see a very simple example of a symptom of the Dutch disease, the rising exchange rate, but one which has nothing to do with the natural resource curse. The same goes for the rest of the things we've told you about. For example, we've told you that an increase in the price of oil had a very strong impact on the exchange rate. However, Russia used a significant part of the oil money to create a stabilization fund and to pay its public debt. All this more than offsets the appreciation of the exchange rate, as you can see in this chart. The horizontal line is the natural exchange rate, so to speak, and the other line shows whether the ruble is over-appreciated or over-depreciated. And precisely what we see is that the ruble moved further away from its natural value during the 1990s than during the 2000s, which is precisely when oil played a key role in the Russian economy. In other words, if we take all policies into account, oil helped stabilize the exchange rate. It did not appreciate it. And with wages and the presence of the industrial sector, the same thing happened. Yes, Russia does have the symptoms of the Dutch disease, but the causes are completely different. There is a much simpler explanation as to why the industrial sector grew significantly less than the other sectors. Have you seen our video on the Polish economy? In that video, we told you how the model of Soviet Poland had three key factors: industry, and more industry. We also saw how when the pro-Soviet regime fell, the rest of the sectors, which had been repressed for decades, experienced a fierce boom. Well, here we see exactly the same thing. Industry had a disproportionate weight of state-owned industry. The Soviets bet all their cards on the creation of huge factories, which could also be controlled by politicians in a very centralized way. The service sector, meanwhile, has no such economies of scale, and precisely for that reason, it's much more difficult to control it through state-owned companies, so Soviet governments brutally repressed it. Of course, when Russia abandoned communism, it was normal that the tables were turned, and the industrial sector lost influence to the service sector. It's normal that the tables were turned, and the industrial sector lost influence to the service sector. And there is another piece of information that confirms this hypothesis.
Contrary to what the Dutch disease predicts, employment in the fuel industry also declined after 2002, and even at a higher rate. Therefore, although we find some signs of symptom 2 in Russia, the hypothesis that higher resource prices attracted labor to the resource industry cannot be confirmed.
On top of that, other authors point out that the loss of employment in the manufacturing sector since 2004 is much more related to productivity gains, such as machines replacing workers, than to the deindustrialization of the country. In fact, the weight of Russian manufacturing at the global level grew during this decade. Okay, less than a couple of tenths, but it didn't fall. And that's just the opposite of what Dutch disease predicts. Well, there is another quite obvious explanation. Yes, a high oil price is in Russia's interest because of its massive oil sector. But on the other hand, it's to be expected that if the Brent barrel rises, then the industry suffers, no matter how much of an oil producer you are. Of course, all this begs another question. How has Russia managed to avoid Dutch disease? Let me explain. The traditional formula for avoiding this problem is to have a very balanced public budget that prevents you from having to issue debt, reducing the flow of foreign capital and thus reducing the exchange rate. And it's also advisable to open the doors to immigration, so that the labor distortions we have already mentioned do not occur. But this does not seem to be the case in Russia. So how did they manage to do it? Well, the answer is quite funny, and I'm sure it surprises you, but it probably wasn't a deliberate plan beyond the stabilization background that we've already told you about. The real saving grace for Russia may have been its brutal corruption. Yeah, I know it sounds crazy, but let me explain. The Dutch disease is based on 2 pillars: that the natural resource boom will attract a lot of investment, and that the economy is flexible enough to reallocate labor. But this is not the case in Russia. Oil has been a strategic sector from the beginning, and foreign participation has been very limited. On the other hand, investment in the industrial sector was much more liberalized, and the country had a very well-educated but also very, very cheap labor force. And so we could say that the investment between the various sectors was balanced. Of course, the oil sector boomed, and we've already seen that the manufacturing sector grew much more slowly. But the important thing is that the difference would have been even more brutal had it not been for what we have just told you. In short, no, Russia does not have the Dutch disease. The reason it is such a poor country despite all the oil and gas is because it suffers from a much worse disease, the Soviet disease. It's no coincidence that Russia and Ukraine are at the same time the Soviet countries that have made the least transition to liberal democracy and free market capitalism, and that they ended up being 2 of the most disappointing. Russia still retains many of these problems. For example, while in China's economic transition, federalism played an absolutely key role, in Russia in the 1990s, the correlation between revenues and expenditures of different regions was minus 90%. In other words, the most successful regions brutally subsidized the rest, while in China, the correlation was plus 70%, which encourages innovation and competition between regions. But we don't want to sign off without making one thing clear. In this video, we've talked about the evidence we have to date, but none of this means that Russia could not get sick in the next few years. In making this video, we consulted a few scientific articles, and they all agreed on 3 things. That Russia had the symptoms of the Dutch disease, which however were not due to that disease, but that it was also possible that it would develop it in the future. And without a doubt, if there is one clear thing, it is that Russia suffers from an even more severe illness, a political and business class corrupt to its core, driven by greed for easy oil money, which has doomed the country's economic potential and allowed absolute tyrants to consolidate power. But at this point, it's your turn. What did you think about the role of oil in the Russian economy? Do you think it has weighed down its industry, or are there other explanations more convincing? Do you think Russia is at risk of catching Dutch disease in the future? You can leave me your answers in the comments. And as always, don't forget that here on Visualeconomik, we release new videos every week, so subscribe to this channel and hit the little bell so you don't miss any of our updates. If you like the video, like it, and I'll see you in the next one. All the best. See you next time.